Hey, this is Jack. This is going to be a bar-by-bar review of July 15th. That is... what is that? Tuesday. Somebody said that they appreciated my videos and that they would like me to make some more stuff. Maybe even just reviewing stuff. So I think I'll do that. It's fun. I enjoy doing it. And the more I practice, the better I get. So here we go. Bar one. Big bear bar. And... probably we're going to go below the low of 1. We opened up with a big gap above yesterday. And what was yesterday? Well, yesterday was basically a trading range continuation day where we tested the high of the prior day, and we just kind of formed a trading range around that price. We opened up with the trading range, and we broke out to the upside. It's a bit of a TTRD. You could say it's a bull channel day or a bull trending trading range day. And now we're breaking out pretty big to the upside. And so the first thing that I'm thinking is the gap up is a breakout and it's being rejected. I think there was also news yesterday, but I don't care. But probably reasonable to sell the close, stop above. Also reasonable to wait. And then you got a small pullback around to the midpoint of the body of the bar, and then we went lower. So now we have a breakout, and the bears are going to want follow through. For the bulls, they see 2 legs down in what could be the bottom of the trading range, but there's no evidence to support that idea yet. The gap up is pretty big, and the rejection to the downside is getting follow through. So it's probable that we're going to get a measured move down of these 2 bars, at least the bodies, if not the range of the entire setup. But it could be the wrong direction. Open of the day, first move is often the wrong direction, but I suspect we go lower. We may pull back. Maybe we'll test the breakout point 1 low or the 1 close, but no pullback. Instead, a bit of a climax, and that caused a reversal up. So now I expect we go higher, trigger the buy to find sellers. We have a bear breakout with follow through. We have a 3-bar bear micro channel in the open of the day. It's a trend from the open bear, but this might be a leg in a trading range. So at the moment, I think it's likely that we're at a minimum in a trading range, and we could be in a bear trend. So the next few bars are going to be important. We went outside down on 4, which means that we're now in a trading range on the lower time frame as well. You know that the reversal up on 3 going above the midpoint of the bar causes the smaller time frame to be in a trading range. So at a minimum, we broke out above a small trading range, reversed down, broke out below, and reversed up. Probably we pull back for another attempt up. This is really a leg 1 for the bulls, and they're going to look for a leg 2 down here, maybe buying more down here for a failure and then a retest. Maybe so we might pull back to the midpoint of the open of this bar to the close or the low or something like that, and then go lower, or we could get a plunge and then a reversal. So it looks like we pulled back up near the entry price for the bulls, but we didn't quite get there. So we still have trapped bulls buying up here. But if they bought more down here, they were able to get out without a loss. So that tells me that we're probably in some sort of trending trading range day, or we could be in a bear trend, and we're just starting to go sideways to correct a little bit before we get another leg down. I do suspect that the sell setup triggers, and I think it's reasonable to be short. I would just use a wide stop and then scale in up here if you get the pullback, because it's reasonable to expect a pullback, but it's also reasonable to expect another leg down. This is really leg 1 for the bears, pullback, and now we're inside of leg 2. To me, this is it could be implied 2 or 3-legged move. If we go below 4, that might be 3 legs down, 1, 2, 3, but we probably go far enough below that it'll convince you that we're going lower. Probably sellers above. Breakout 6 and follow through 7. Retest of the 4 low on the way down on 7. That is pretty convincing to me. I think that this could still be a leg in a trading range, but that is pretty convincing to me that we are probably in some sort of bear trend or bear trending trading range. And if we do bounce here at the high of the prior day, we may hold these highs. I still think we'll probably go lower, maybe down to one of these levels here. Or we might fail and reverse up strongly, and if we can do that, we might have a trend in the opposite direction. But so far, we have trending behavior. Small trading range, final flag for the bears. So maybe we reverse up here. If I'm short, I'm looking to sell more. I'm not looking to get out above that or above this. And my stop is probably up here. at a minimum, my stop is probably at this breakout point, and if we pull back up to here, I'll look to sell and then get out on a retest lower. But the thesis here is either bear trend or trading range with a high that's right here, and if we go much above that high, I'm going to be out. So pullback, reasonable to sell up here, but probably you'll get another bar. We're bouncing at a reasonable place to bounce. We have 1, 2, 3 legs down, little overshoot. You could draw maybe a little trend line right here. We have a wedge overshoot, but probably that's too small focused. That's too narrowly focused. Probably the pullback is going to be deeper. Probably you can sell somewhere up here. Line chart swing point on bar 5, and you can see the line chart swing point right here on 5. It's probably where we're going next. Look at this, bar 9. So we get a reversal up. Pretty good entry bar for the bulls that are buying the close or above 8. And we closed above that line chart swing point at this point here. A little sneak preview of what's coming next. What do you think is going to happen when we have a bull breakout of a swing point in a bear trend, or a bear swing of a trading range? Probably we're going to find sellers up here. So 9, as strong and good as it looks at support, is probably more of a sell to close bar or sell above bar with a stop up there. Deep pullback 10, we went above and triggered more buyers, but they're probably disappointed here with the deep pullback and are going to look to get out. So we may find sellers at the close or above the bar. Inside bar, the bulls are probably going to give up below these lows. So I don't think it's a good idea to buy down here, but a better idea to maybe look to buy down here if you're a bull. If you're a bear, this is exactly what you want to see. You want to see a minor reversal that's starting to fail at a reasonable place where you would expect a failure. So now we're starting to pull back here. I suspect we're going to go lower, trigger the sell, and break out below 9 and 10. But we may pull back before we do it. So if I'm selling, my stop isn't here. It's like up there, and then I'm scaling in if we get another leg up, because this is one strong move, and we could pull back and get a second strong move right there. But instead, we're getting the bear breakout 12. We went below the low close, but didn't close below it. I do believe we're probably going to still go lower. We're probably in a small trading range, and we're about to break out of it right now. I think this was a good signal bar for, to trigger the bear flag short. And now I think this is a good signal bar indicating that we're breaking out below 7. So it's reasonable to sell anywhere in here inside of this bar's range with either a stop, ideally up here or higher, and then scaling in up here if it pulls back, because this is reasonable to expect another move up, and you can't just be one-sided. So we broke below, reversed up, no surprise, but probably we're going to still go lower. We might have a failed breakout of a trading range, and that'll trigger a second leg up for a test of the 10 high or the 9 close, because we have a swing point right there. But breakout with follow through, even though it didn't close beyond probably whatever pullback we get, it's minor, and we still go lower, so safe to still be short. Same thing. And new low starting to kind of fizzle out here. Now we've got a little bit more of a clear wedge happening here, but something's happening in that micro channel. Is telling me that we're probably going to go a little bit lower, even if we reverse up. So we reversed up, tested the breakout point, the high of the prior day. The breakout isn't that good, so the reversal up is reasonable, but the bars don't tell me that this is going to end well. So this is probably going to be a minor reversal. There's probably going to be sellers up here, and we're going to need to retest the low. So if you held short, now you're trapped. You have to hold with your stop at a reasonable place, somewhere up here, and then look to scale in somewhere up here. We have a gap between that high and this low. We have a gap between this close and that high close. Here's the midpoint, so now we're triggering a short and breaking below the wedge. That's a bit of a surprise. I would have expected a little bit more up, so that's surprisingly good for the bears. Breaking out of a wedge, probably not going to last very long. The tail, good indication that this is going to fail. 17 right here might be a buy the close bar for this reason, but the channel down is really tight. I would never do that, so I can't recommend it. But I would still be short, looking to sell anywhere in the sell zone up here. Reasonable to take profits. This bar is probably going to cause a lot of people to take profits because it's closing so close to the low of the day. And if you've been short anywhere through here, you're going to want to protect your profits before we get a deep pullback, because look what happens after every strong leg down. We get a pullback, and you can probably sell higher. No surprise, probably going to go a little bit higher. Everybody bought the close of 18. That tells you this is probably some sort of low. Now, if this is a low and I'm looking to buy for a minor reversal test up here, maybe it's reasonable to buy with a stop down here and then maybe scale in at the midpoint, betting on a test back up to this low, because this is now a reasonable low. There's no tail on the bottom of either of these bars, and that's a sign of relentless buying. And when that comes after a climax and a series of climaxes and an overshoot, it tells me that this might not be far away from a intraday bottom that will lead to a profitable reversal trade. Moving higher but tails above the bars, not a good buy signal bar. And a tight channel down, we're still probably going to bounce somewhere and then retest the lows, but reasonable to be long and looking to buy below bars for pullbacks to retest up here for a double top bear flag. We're getting back above the wedge overshoot price, so that tells me buyers below, another leg up. We've completed this, bear structure for the time, and now we're starting to build a bull structure. I imagine we pull back and go higher. Pretty convincing sell signal, but I think the reversal up is strong enough to make me think we're in a trading range, at least for the moment, until we get some rolling over like we did on 11-12. This is a good start, but it's a little too quick. We might need to pull back before we go lower, so instead of selling here, why don't you sell in the sell zone up here and use a wider stop, just in case you get a second leg up, because this is only a midway 50% pullback of this swing up. So if you want to sell, that's fine, just go small and add on up here, because look what's going to happen. We're going to trigger the buy and we'll get a second leg up to test these highs. Reasonable to buy the stop entry, but I would use a stop down here and then just get out if it reverses down. But even then, you don't have to get out below. I would say reasonable to buy up here, just use a really wide stop, maybe add on at this low, because the bears could get a second leg down. 21 strong enough for a second leg down, but it might have happened intra bar, and now that we're reversing up here, they might just sell higher. So they're probably going to just sell higher. Now we're basically in the middle of an expanding triangle that took place on a smaller time frame. We can't see it here, but I guarantee it happened on a smaller time frame. And high and low is right here. So we're right about the middle of that expanding triangle. We made a lower low, then a higher high, and then we broke out. So now we're back into the middle. We're two legs up, trading range. But this looks strong. This looks strong enough and non-climactic enough to make me think it'll get a second leg. It's also one big piece right here. So we might get a pullback below 22, 23, and it'll probably go up higher for a wedge bear flag. So it's reasonable to take profits if you're long. It's reasonable to initiate new shorts above this bar if you're flat. And if you're short, I would just keep holding and bet on a test down here if you sold, and use that wide stop, maybe scale in and get out at the midpoint. Probably that's what happens in the next two bars, but we might go higher first. Small follow through 24, not all that convincing that we're going to go all that much higher. We're testing the line chart swing point on 16 close, so probably we find some hesitation here. Reasonable to think about selling with that wide stop. And then look what happened. We tested down in between the middle of the gap. So it's reasonable to look to buy here if you think that the bulls are going to get a wedge bear flag. And it's reasonable to sell up here if you think that the bears are going to get a double top bear flag. So you can trade both ways. The trading range is wide enough that we should test up to here. But now we have two legs up, and that's done, and it's a double top bear flag, lower high. Lower high on the line chart, we have a swing there, lower high. A little sneak peek of what's to come right here, this little swing point. So 24, reasonable to get out of longs below the bar. That could trigger a short down here. Two legs up in a bear trend. We're probably right around the moving average. Yeah, right around the moving average, but I don't really care. I think that this is strong enough for another leg, but we're getting the reversal, and the reversal has a big tail. It tested the close here, so we might have support. We might have a trading range, a failed breakout, and now we might have that as support, getting a third leg up, and maybe a surprise bull breakout, and we test back up to here. That's what the bulls want, but what do the bears want? The bears want this to be a wedge bear flag, so it's really important to see what happens at the high of 16, the high close here, and see what happens below this bar. If we break out below and find buyers, probably we're going to get a second leg up. Or if we make a higher low or a double bottom, then we may test the highs at a minimum or go up to here. And if we get up to there and we have strength, then we could easily test back up to there. So if you're short, probably a good idea to, scale in, add on above these swing points and use the wide stop. And we'll see. If you're long, I think it's reasonable to get out on a retest up here. Reasonable to get out maybe below these bars. Once we go below here, probably the bear flag will trigger and we're going to test down here, maybe lower. So I don't know. All right, double bottom, reasonable to get out of shorts above, but probably reasonable to sell up here. Reasonable to be flat and waiting and looking. We have a reversal with bad follow through, technically follow through, but holding support. So we're probably going to trigger the buy and go up for the wedge. We got it 27, 28, teasing us 27, not quite there. And then 28, we're closing above, but barely above. We're above the line chart swing point. And now we have 3 legs up. And if you draw the wedge, it would look something like this. And ultimately, probably we're going to find resistance here, but if we can break above, maybe we can go up and test here or up to there. Or if we go above or we find sellers at the close and we break below the bear flag, probably we test these higher lows and make it down to here, possibly a new low of the day, testing a prior close from a prior day down here at 295s. So reversing here, pretty strong reversal bar, and sellers at the close. So any bulls who were long got out above 24 and got out at the high close. That's great. I mean, the bulls did their thing, they did their job, and now it's time for the bears to take over if they are strong enough to take over. We have a double top bear flag. We have a completed wedge bear flag. We have a very strong sell signal bar, 29. And if you happen to be at the desk at this very moment that this occurs, it's reasonable to sell right here with a stop up there, but even better to sell right here with a stop up there, scale in once if you're wrong and look to get out, or maybe even use a wider stop and scale in some distance above here, because if you are wrong, this will probably get a measured move in the other direction, but it probably won't get 2. And then if you get good follow through, you can just look to add on somewhere down here for a test down to your target. Now, if you're a bear, you're targeting down here at a minimum, these higher lows at a minimum. And probably we won't take the elevator and just get straight down to the 18 low, but probably we'll stair step our way down in some sort of a channel. We have a wedge followed by a 1, 2, and a 3 wedge. We have a 1, 2, 3 overshoot. We have a 1, 2, 3. We get a wedge this way. We're probably going to get a wedge down here. So reversal with follow through for the bears. Good, but double bottom bull flag now. Maybe we get a higher high, lower high, major trend reversal. Maybe we find sellers above the close. We'd have a small gap. I imagine that the gap may be resistance, but probably sellers in the midpoint of this bar or up here at a minimum. So we tested lower, reversed up, 31. We probably go a little bit higher, but I imagine still sellers above. We closed below the gap, so that makes me think that we may not go very far above if we do go above. And we're breaking out to the downside. Pretty strong climactic reversal bar. We're below that swing point. The next target is right here. But look at the close and look at this bar. We're that far away. We're probably going to test it on the very next bar and then shoot up for like a pullback or a reversal attempt. Or we may just find buyers at the close or one tick below. We may not make it quite there. But I imagine we find hesitation below these lows before we get to 18. If you're short, you want to get out on strength. That strength and this reversal wasn't that strong, so it's fairly reasonably weak. And if you do call this reversal down weak, then you would probably want to get out right here and reset yourself and wait for the next short. But if you consider this strong because it's good context, then you would probably hold and scale in above the bar or at the midpoint or at the sell signal bar low, keeping a wide stop either up here, probably better up here, because now that market has moved down below this low and that low, if it gets back up here, it's probably always in long, and you don't want your stop to get hit as soon as you figure out if it's always in long or not. You want to get some distance above. And that's a good invalidation point, right? If you're selling down here, maybe my trade is going to fail if it gets up here. And if it does get up here, I don't want to take a loss, because if it does get up here, likely it'll pull back enough. I can get out at the midpoint if I scale in. So I'll sell here, add on there, betting on a test down here, maybe a new low. But that's maybe a little aggressive. So maybe you look to sell a pullback, maybe a pullback to the breakout point, and you target above the close of that prior day over there, the low here. But we're probably going lower. I feel like I'm just droning on, all to say that probably we go lower. But we pulled back, and we're probably going to find sellers up here. Perfect breakout test. I imagine we trigger the buy and find sellers up here. Even better, we found sellers below that gap, so that's reassuring. If I'm short, I'm willing to scale in above. And, you know, I might reserve that for up here, because that might, this might be forming a channel on a smaller time frame that's going to lead to a breakout. And we have a low close that is a little bit lower than that close, so I imagine we can still go lower, making lower lows, lower highs. Probably would trigger the short and go lower. Wouldn't be surprised if we got a breakout. If we did get a breakout, you probably just get out above, you know, then you have a, you know, half hour stop loss. And but maybe if this triggers and it's strong, maybe you add on real quick and scalp out right there for, you know, 1 times your actual risk whenever the scale in is. So 36, reasonable to sell. Breakout point is holding. Tested up above, reasonable to sell here as well. Just rely on that stop if you didn't sell. And then if you still didn't take those entries, you can sell below 36. Maybe you can sell below 37, but because 37 is so close to the swing point that was just formed, you might as well just sell there. And by the time you get here, if it starts to hesitate, maybe just get out. But probably you can hold for a test down. Didn't get there, but we're like a tick away. I imagine we do get there even if we pull back first. All right, that's a problem because we have a double bottom. If we get a breakout above, we're probably going to go higher. So this is a problem for the bears. Right now, context is most important, and the context is bear trending trading range day, possibly trading range low. I don't see any strong bull bars for the last 12 bars or so, but we did have them over here. And we do have strong bear bars, but we don't have many consecutive strong bars. So right now, if I'm short, I'm just going to rely on my stop. Maybe I'll scale in up here. If I already scaled in and I'm in a big position, then I'll just get out above the highs right here, because then I'll probably be wrong. But if we go above here, I imagine we find sellers and this breakout point holds and the close of the prior day holds. And I'll probably just get out up here if I'm wrong. So that would make me sweat a little bit, but probably sellers below that bar. Micro double top and sellers probably would go below these lows and make a new low, and maybe we test down here. Okay, definitely taking profits on that bar. And this is a climax, consecutive climaxes. We have another wedge overshoot right here. You can draw it like that. And if you look at the day, you can't see it because of my movement scaling. If you look at the day up to this point, yeah, we might go lower, but look at the tails and what happens after that on big breakouts. Okay? Like we get a big tail right here after a big reversal. The structure isn't all that strong. A lot of trading range in here. We're probably gonna go lower, but I bet we reverse back up into here. Probably testing these breakout points. So I'm flat. And maybe I'm buying, but if I'm buying, I got to use a really wide stop, maybe somewhere down here, or a test up into here. That's pretty reasonable. Reasonable sell signal here. If I bought, I think I would just rely on my stop and scale in below 42 somewhere, like right here maybe, and then just get out at the midpoint if I'm wrong. Keeping them stop down here. Probably we don't get a measure move down of this. And that's probably where my stop should be, because this breakout is starting to fail and go sideways. And now, if I bought or if I haven't bought yet, I'm starting to look to buy. And if I did buy, I would do the same thing. I would buy above here, above maybe 43, the breakout. And I would look to buy more below 42 and keep my stop down here. Okay, we didn't trigger the buy, but we did something else that's even more important. We tested support and it worked. 42 low the buy below 42 worked. I wouldn't have bought below 42, but if I did, if I was long in here, I might have. And now if I didn't, I would buy above 46, keeping my stop and aiming for a target maybe up to 31 or maybe 35 high. Maybe we get back up to 28 close. Bit of a stretch. That would be a nice swing, but I don't know that I can ever swing that long. Also, the time of day right here, I'm not trading on any of this. It's 12:45 right now in the afternoon, and I usually stop trading around 11, 11:30, 12, 12:30. But anyway, in any case, I'd be willing to buy above that, and I'd be willing to hold because that's a good entry bar. And I'd be disappointed with that pullback, but then I would see it's a break and retest of the breakout point, and it's follow through from my breakout. And we have a 3-bar micro channel after a strong reversal, double bottom, lower low, major trend reversal after a triangle, final flag, bear breakout, reversing up on a bear trending trading range day, expecting a test up to maybe here or here, the top of the trading range. If this is a big ass wedge, 1, 2, I think the pullback still makes sense to expect it to get at least up to here. We had a failure right here below the close of 41. Like theoretically, this is a double bottom and we're breaking out below that double bottom. So we might find resistance right there, but we're breaking above it, 48, getting above it. And now we have a shaved bar, 49. That is really good for the bulls. This is a strong reversal. Whatever pullback we get is likely going to be minor, and we're probably going to retest this high at a minimum, and probably we're going to get all the way up to these highs. So it's reasonable to buy if you're flat and use a wide stop, like maybe down here, and then scale in below 48, 47, the breakout point below that, and bet on a retest up here, or maybe buy below that bar if you're flat and looking. But you didn't get it, so I would have bought. But we're probably still going to go higher, maybe up to these highs up here. Why? Because trading range. You can draw a trading range basically from here all the way over basically to here where the breakout occurred, and now we're going back up into this range, and we're probably going to test the highs. Always in long, micro channel, unsustainable. Probably we're going to find sellers at one of these lower highs. And it looks like we found it right here at the first lower high. No surprise. But 51 is a buy setup. Reasonable to look to buy right here and just use a wide stop. Maybe you buy below 51, maybe you buy the close. Maybe we pull back another bar, but maybe not, because we have a really tight channel breakout right here that has a high probability of going a little bit higher. So I expect a new high after this first pullback. Maybe we don't get another pullback bar. But we have an inside bar, so probably we trigger the sell. That would be a low 2 for a double top bear flag and a test down here. But after the strength on this reversal and the weak bear breakout right here, 51, and small signal bar for the bears, 52, I don't think it is all that likely that this breakout will lead to a big move back down to here. We could get a big stretch bar, a big climax bar, like something like that, or like right here, 42. But this time control and uniformity right here tells me that buyers are in the market. So I think whatever breakout we get is going to find support. Reversed up, reasonable to buy above 52. That would be a high 2. We have a high 1 right here, 51. Didn't trigger, pulled back again. High 2 implied, technically high 1. Reasonable to buy, I would use a wide stop, buy more below 53. And reasonable to take profits up here. We're testing this high. Maybe we get up to this high or that high close. Probably we do. This is a breakout and follow through. Leg 2, tight channel, spike, pullback channel. We probably are going to pull back below 54 low, but I imagine whenever we do, we get back above 54 high. And look at that, we did it all on the same bar. But you don't know if we went above, then below, then we closed here, or if we went down, then up, then closed here. In any fucking case, buyers below 54, we probably get a new high. We got it. Probably buyers below 55, support somewhere in here, maybe down here, and then we get a test back up. But reasonable to start getting flat because we're starting to go sideways after new highs. That means we're in a channel. You can still look to buy, but you got to use a wide stop and scale in. And if you do that at the wrong time, you might get trapped more so than you think is likely. I imagine we break out right here. We're still getting good follow through. This bar is painted blue because its close is above the midpoint, so it's a weak bear breakout below 54. Here's a new high. Probably we're going to go to these highs, maybe all the way up to the high close 28. That would complete the trading range. We'd also probably have 3 legs. We technically have 3 legs right here, but it's not symmetrical. This leg has way more bars than these other 2 legs, so this is probably all one leg. One leg pullback, one leg pullback. We probably get another leg up to the close here. Okay, that's not good. We're running out of steam, and it's technically 3rd leg. Double top bear flag, testing the sell signal bar low. Sellers above these highs. Like, I would be quick to get out, and it looks like we're getting pretty wedgy right here. So maybe we get a surprise bull breakout, but if we did, it would probably fail within a few bars. So it's reasonable to start selling up here and scaling in if we continue to go sideways to down like we are right here. Pretty strong sell signal, probably the strongest sell signal since down here, and pretty decent context. So if I am selling, my stop is up here and I'm scaling in on a retest up here because that is still a reasonable probability. And if I'm a bull, I'm probably just getting out right up here because now we're making a tight trading range around a breakout point. Why would the market make a tight trading range around a breakout point? The only reason would be because of price agreement. The price is correct here. We no longer need to go higher. We may not need to go lower. It's okay right here. And that tells me that we're in breakout mode. We could go up or down after we keep going sideways. So if I'm a bull and we've had a bull swing in a trading range, probably time to go flat. If I'm a bear and I just watch the bulls get flat in a trading range swing, then I'm gonna start thinking about selling. So I might sell above these highs. I might sell on a breakout down here, but probably I'm going flat. Second entry, 60, reasonable sell signal, but tight trading range. Might not get very far before it reverses, pulls back. Reasonable to wait, reasonable to sell. Just use a wide stop, scale in. Probably just wait. Okay, maybe I'm short here. That's enough of a breakout to make me think we're going lower, but it's not all that convincing. So if I am short, I'm probably going to scalp out below that low with my real stop up here, willing to scale in above these highs, but just looking for a quick scalp. I'd probably go flat on 63, but maybe I hold, stop up there. I imagine we pull back, but I also think we're going lower. Now we're starting to collect bear bars. Okay, break and retest is 60 low, and we close below, so I'm probably thinking about getting short if I'm flat, and if I'm short, I'm looking to maybe add on the breakout and tightening my stop and then getting out maybe down here at 51. Maybe we don't get all the way back down here, but we probably get down to 51. And there we go. We got to 51, my target. We hit my target and bounced, but we got a strong breakout bar and it's painted red, so that means it gets follow through. Might as well see it. I wouldn't be in the market for 66. I would probably be flat, because this is climactic bar. It's an overshoot of this little rollover we're doing, and really this is the breakout that needs to reset the market cycle to make me think we're going lower. But we have a trading range and the low is right here, so if anything I'm looking to buy, and I'm willing to scale in, but I would not buy 66 and I would not buy 67. I would just wait. Probably would trigger the short and rally, but I would just be flat and just watching for the rest of the day from here. Tight trading range, anybody's guess, you know, sideways. Okay, bear breakout with some follow through. My broker doesn't allow me to trade after 330, 345-ish, so I wouldn't even mess with none of this because I would just have to think too much. But probably we're going to go below these lows and test the low of the range. Instead, we're reversing up and we got good follow through here, 75. But tail, it's a small trading range. We haven't broke out of it yet. We tried to here and failed. We reversed up. Maybe that'll fail. Maybe we'll get surprisingly good follow through, but it's the end of the day. Doesn't really matter to me. And we get a big bear breakout at the end of the day. So that's basically the day. That was a fun little review. I actually really enjoyed that. So I'll try to do these reviews more often, and they'll probably always be different. I'm probably always going to have a different perspective from day to day. I'm probably going to have different indicators on the chart. I might be like a day late to do a review. I might do like a weekly review. I don't know what I'm going to do. I do want to do more stuff on YouTube. I do want to make more videos. I want to make like trade reviews. We can go over my trading today in a separate video. I'd like to do more bar by bar reviews. I'd like to do like day structure reviews. You know, this was a trending trading range day, and also a bear trend day, a spike in channel bear trend that lasted all day. Brad on the end of the day review drew this as the spike and channel here, and then we got a bear breakout of that channel. I think that is probably the best view of the market, because if you shore it up, look at the higher time frame, that's what's playing out there. And then today has been interesting. So I don't know, I'm just kind of playing around. I'm just going to do whatever feels natural, whatever I think might be helpful for where I'm at in my development stage. And if I can be helpful for somebody else's developmental stage, then great. But for now, I'm just going to kind of play it by ear and do whatever. So anyway, that is the review, and there you go.